All right, uranium friends, let us check in on the physical market itself. We're looking at the UX1. The futures themselves is a monthly chart. Can't really get much from the daily, right? So monthly and weekly is what I'll look at here, but it doesn't matter, right? It's the monthly chart that matters here. So still, if technicians will say, all right, well, it tested this breakout and it's breaking down below it. So now what we need to do is how's it going to react here? So when I have these key levels, right? This first one was 70, I don't know, 72, right? The next one was 57, 55. That's the level that I think is going to need to be tested, right? So the first thing to tell me that it's going to be tested again is this moving average rider. So I know all you smarter people than me can sit here and say, well, spot doesn't matter. If anybody is still saying that spot doesn't matter after what we've just gone through, what this sector have just gone through, um, you're either just lying or you're foolish. Um, I guess it doesn't matter if you don't care, but it certainly has been affecting the equities and the long term price. Of the long-term contracting price, right? And how do we know that? Well, there you go. It's starting to drag it down, right? So, um, this guy Flex J, he posted this a long time ago about that Eiffel Tower pattern, and it was pretty funny, and everybody broke his balls about it. But I talked about this dynamic before as well. All right. Well, spot is can potentially do exactly what it did here, which was which was just overshoot and then come back down. And that's exactly what it's doing. And then if it's doing what history has says it will do, um, it could start dragging long-term price down. And the equities are telling you that that is a possibility because they are all very bearish right now. They have all lost their trend. So we're going to have to see, obviously, how it plays out. I'm sure the people that it's in their best interest to keep you heavily involved in the sector and only say bullish things because they're making money off of that through subscriptions and interviews and financings with certain companies and all that stuff. So I don't really pay much attention to all that crap because I know the majority of it is just fake, right? So they were literally calling this the floor. Every single one of them. Every single expert was on here calling this a floor. Now we've got a new interview with some other dude, Dustin Garrow, whatever. Even he can't understand why the spot is so low. They don't have a clue, is really what it comes down to, right? The only thing that you can be guided by is the price action. So, regardless of that silly little rant, here we are. And we are in a full blown monthly downtrend. I would venture to guess it might be a quarterly. Well, it still hasn't made a bounce yet on the quarterly. So, key metric again on the quarterly loss, it's trading well below the quarterly 12 EMA. It's trading well below the 200-day moving average and all of the moving averages. The only thing that's got a chance to save the futures right now is this monthly 50 EMA. Um, so it's an inflection point coming here. And the fact of the matter is that you could see a really, really healthy bounce, but still will do nothing to change this trend. So there's going to be a ton of work to change the trend. It's just really, unfortunately, the way it is. It is coming into a weekly oversold situation, but history says where the levels it's at is nowhere near where it could go. So it could get a lot deeper from here. This down move could continue. And if the down move continues, it could start dragging down this long term contracting price. And if the long term contracting price continues on its downward trajectory, well, the mining equities are going to take one hell of a hit. um, more than they're taking now. That would be my guess. All right, so that's the deal on this stuff. I'm not going to get nutso with trying to give you some sort of technical analysis on this. It's going down. It's been going down for a year. Everybody was saying this was the floor. They were all wrong. It's just that simple. Let's take a look at U.UN, and I'm sure it's going to look similar, right? Because this is a proxy for spot. It does have some liquidity. There is some moves here, some pivots to pay attention to, confirming the downtrends. But it's the same deal, right? And Sput can't even get anywhere near Nav, so they can't raise money, even though they're trying or they want to. Now they're running low on cash, so they're using their cash to pay their management fees for their AUM. So Sput is still doing fine in the market because they're getting paid. Um, it's just that simple. So there's going to be a point where they're going to need to tap into some reserves. They do have a that allotted for in their prospectus where they can sell some uranium from time to time to cover the costs of carrying and holding the uranium. We'll see. U.UN is already breaching its monthly 50 EMA, so one would suspect that the uranium futures are going to do the same. It's the real simple fact of the matter is in this entire sector, the place to be is in these plant builders and the fuel fabricators. That is the place to be. So the physical fund is not doing well. I have stopped out a while ago. My runner stopped out on 100% gain. That was in SRUUF. I stopped out when I lost this level on my runner. So I was in here before this fund even existed. So I was down. Cost basis was somewhere down in here, like $8 or $9. So sold a bunch along the way, bought some back, sold some more, held my runner, lost it, stopped out after this level broke. So the physical uranium is not looking great. There is, in case you don't know, there actually is another fund. Roundtree has got this deal here, and it's UX. And one would think that it's going to help maybe get some buying pressure on spot when the time comes. Not doing anything now, but it's good to keep an eye on. It's another proxy as far as I'm concerned. Like, look, I'm not going to buy SRUUF again. I don't need to. You know why? Because this name does the same thing. It's on a big board exchange, therefore I can put my stop loss orders in, mitigate my risk, and it's got an option chain. So to me, it's far superior. Yellow cake, nothing. It's just the same deal as everything else. So we see what's going on here. The NAV plays on these are, in my opinion, a bit better. 15 to 20% discount usually brings in some arbitrage players on the funds, especially on U.UN. So that's what I'd be watching. But in my opinion, uh, this does not look good. My opinion, I feel like it wants to get at least down to this 58 area to test this breakout. Then we just have to see what's going on after that. And that'll be that. If you need to look at this chart, it's on Cameco's website. You just go to CCJ's website and you go to uranium price, and that's the deal. It's at least it's something, right? So this look here is starting to look a lot like this look. You know what I mean? Over and out.